I think this would be a great time for us to zone in on the physician investor, and understand their challenges and understand why you have found this to be such a successful venture for you being a practicing physician as well. Can you talk to me a little bit about your friends, your colleagues who are physicians and, maybe what their pain points are, and then, why they may be interested in real estate, but what keeps them away from real estate and how you've been able to overcome that?
Yeah, so physicians are very hardworking people. They're smart. They have good credit. They make a good living, and a lot of them want to get involved in asset classes other than the stock market. Maybe they have somebody that manages their money, so they just kind of let them handle everything. Maybe they're intimidated by the time commitment. They have they're working long hours and they don't feel like they have the time to put into real estate. So frequently people will say, "Hey, I want to get into real estate, but I just don't know how." So I've thought about that quite a bit. And the three things I've noticed are: number one, everybody always thinks they're getting in too late. I remember in 2016 when we were buying these first 10 properties, I remember thinking to myself, man, the people who got in 2012 and 13 are making out like bandits. We're getting in at the top of the market and this and that. And the top of the real estate market is always it's like a mirage. It's always 2 miles down the road. You kind of keep going there, but you never
Right.
really reach it. So because of our recency bias, which I was talking about earlier, we know what these properties were going for 3 or 4 or 5 years ago, and we're seeing what they're going for now. So you just kind of naturally think that they're overvalued. But again, if you're in it for the long term, then that really shouldn't matter anyway. The other thing is that people look at real estate through the lens of their other investments. So for example, if you're primarily in stocks, if we just ignore options and dividends and all that for the moment, if you're in a stock, you're putting money into a company that you think is going to return value to shareholders and increase in value. And your exit is if the price per share increases and then you sell it and then you make a profit. So they look at real estate appreciation, which, over the years may average, 3-4%, something like that. And they say, well, why do I want to plunk down all this money for something that's going to return 3 or 4%? You can't look at it that way. You have to look at real estate as something that will appreciate over the long term, but in the meantime, will also give cash flow. There's a lot of tax benefits to real estate. I mean, when I do my spreadsheets to calculate returns for properties, I really don't even account for appreciation because to me, that's such a small part of it. I really look for the cash flow, the tax benefits. And then you have to remember that all that is amplified by leverage. I know you've probably done whole shows on leverage, but that literally ups your returns by 3, 4, 5x. So looking at it in a different light. And then the final thing is they think it's going to be difficult. People always associate real estate with getting the stereotypical call for the clogged toilet at 2 a.m. But that never happens. You have a property manager that handles those calls. You'll have to approve, some larger work orders, but I spend very little time during the day or during the week dealing with the nuances of owning properties.
Yeah. Why do you think that is, that people just assume it's going to be difficult? It's like we have so many service providers and other parts of our economy that make something that would be difficult easy. And we pay those folks a rate and then they make life easier for us. Like, why do we just assume that that's impossible in rental properties?
I think probably just because of the size of the asset. I mean, you can buy a stock for a few $100s or a few $1,000s, but if you're buying a $200,000 single family home, you just kind of assume that everything's going to be bigger.
Yeah, I'm with you there. I think so. I wrote down the time component. People don't feel like they have enough time. The recency bias, which makes it difficult for people to take action. And then people just assume it's going to be difficult. But, you have solutions for all three of those. Obviously, you've been able to overcome all three of those. The time component is the one that I wanted to focus on for you. It seems like, now that you're a JWB client and Dr. Chris built his portfolio of those 35 properties, and then he brought those over to JWB for us to do the property management for him. So he didn't acquire those through JWB. He did those largely on his own with the team that he created. And that's an incredible opportunity. We love serving clients that bring properties to us. But I'm really interested on the time component. How did you do all of this? I mean, I would assume as a practicing physician, you're working a regular job. Like, how did you solve the time component, and how can other physicians and non-physicians learn from you?
I think most of it's just time management. Fortunately, my wife was very active in rehabbing the properties and dealing with some of the day-to-day stuff. But, the turnkey properties, I've spent virtually no time at all. It's really just, decent time management. I mean, I probably spend, with all my different investments, other than real estate, I probably spend, maybe 5 hours a week. Half of that is just menial tasks like, putting things into QuickBooks, and the other half is strategizing. But you can really spend as little or as much time as you want on it. It's very easy just to acquire a property that's got a tenant in place, and you just kind of let everybody else do the work and collect your check every month.